Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information. Mitchell Sneddon, welcome back to this mini-series on the Australian Investors Podcast.
Thank you very much, Owen.
It's always a pleasure to chat, mate. Today we're talking about 5 things no one talks about in investing, but we're talking about
to talk about them.
Yeah, so perhaps no one talked, past tense, about these 5 things.
Look, I reckon someone probably has in the past as well.
Yeah, well, we shall see. We shall see. So we've so far covered how I invest, and feel free to bring your questions, send them in, because we will be doing a live show for the next episode of this mini-series. There is a link in your podcast player or below the YouTube video. Then we covered the 10 truths of investing, or the 10 truths as we see them at Rask. That was the previous episode.
Yeah, we got pretty deep in the weeds in investor behavior, psychological biases.
Yep. And in this episode, we're going to talk about 5 things no one really talks about. We'll say that much. Because these are the things that people don't like to talk about in our industry, Mitchell, because one, it may be difficult for them to talk about in the sense of they don't really know what they're talking about. Number 2, it might reveal things about our industry and about the performance of people's investments that otherwise would be better off not known. And to be honest, it's just a little bit boring, but we think it is vitally important to long-term wealth creation. So I'm going to play host in this particular episode and ask you quite a few questions. I think one of the things that we've realized when it comes to Rask Invest, which is how we invest for our community now, in talking with people, is that a lot of our community, and I know you'll probably say it's not just these people, but I'm seeing a lot of people that are preparing for retirement, whether that's an early retirement, pre-retirement, or in retirement. There's a lot of people that have that singular goal, as well as passive income is probably the secondary one. What are the types of things, when you're talking to these people, what are they looking to do? What are they needing to do?
They fall into a couple of different camps, predominantly. One, they are all looking for an investment option that they can trust and be hands-off with. Mm-hmm. They're not coming to us for something that they want to be hands-on with. You know, that's a brokerage account or something like that, or they want to go and get a subscription where that's going to tell them to buy, hold, sell stocks. You know, they're coming to us because they don't want to do it themselves anymore. In the last podcast, we actually touched on the people not having the time, the inclination, or the curiosity to do it themselves anymore. Mm-hmm. And a lot of the people that we're coming to us, actually, because they're listeners of this podcast, they generally speaking have the curiosity. A lot of them have, some form of curiosity anyway, but they don't have the time or the inclination. They're growing their careers, mm-hmm. So they're ultra tuned into growing their wealth. Okay, dollar cost averaging, really big conversations mm-hmm. around that. So they're tuned into growing their wealth, and they're growing their family as well. So time is not on their side. Inclination. I'm seeing a lot of people who have been successfully running their own SMSFs coming to us because they want to do different things now. They're retired. They want to get out there and go on holidays and not have to worry about if they got an internet connection or not.
Yep.
So the first thing is they're wanting someone who they trust to do this investing for them. Mm-hmm. Secondly, and they're wondering if we're the right fit, and we're having those conversations. So that's great. Secondly is they are needing some strategic pieces of advice. It could be drawdown strategies from their SMSF. It could be strategies about adding how much they can add to their SMSF leading up into retirement, what structures they should have set up, estate planning as well, the intergenerational wealth transfer that we're seeing coming up. There's a big conversations about that happening in financial planning world. I am seeing people come to us and wanting to talk about, hey, can you talk to my kids about investing? Because they're going to inherit $2, $3, $4 million portfolio.
Yeah, wouldn't that be nice? Yeah.
And I want them to have some knowledge around what they're getting and be getting set on the right foot. And then things like moving into retirement homes and whatnot. Now, we're not advisors.
Yep.
We can talk about Rask Invest and what we do there. We can talk about general investing information. We can't get down into the weeds with these people about, their drawdown strategy from their SMSFs or different investment structures. So that's definitely where we would, look to some of our great financial planning partners and put them in touch.
Yeah. I think what I've found is that a lot of people, when I've spoken to them, is they have their financial advisor, but they're still reaching out to us anyway. And I think it's because they trust us for the investing and also they want to support us, but they want the financial planner to do that strategic stuff like estate planning, help them understand that. But they want, as someone put it to me, they have their personal board of directors, so to speak. They have their financial advisor do that. They have their investor do this. They have their accountant who does the SMSF or their income tax return. And then they have other professionals, whether it's a lawyer or someone in their life, and they just see us as
your panel of experts.
Yeah, exactly. And they see us as they want to build their A team, that we do the investing for them so they can get on with doing the other stuff. Another really big thing that I'm seeing, Mitchell, is that community of people who own property that for the first time in their life, they've said to themselves, you know what, actually, it turns out this property thing doesn't pay a lot of income and it causes a lot of stress and there's a lot of debt. So I want something that's none of those things.
Yeah, well, ETFs cause you very little stress, I think, anyway. If you, it's actually interesting. I've been talking to a lot of our existing investors and, a lot of them are coming up to their small anniversaries, like a 1-month anniversary for our really early adopters. And I give them a call to see how they've gone with it. And 50% of them said, sorry, mate, I haven't looked yet. They don't want to, they know the more often they look at it or the more hands-on they are with it, the more they might make a mistake or they might, pull money out or put money in at the wrong time or something like that. And so these people have just trained themselves going, oh, look, I'll look at it in a few months' time.
That's great. And we will keep you informed. Feel free to give us a call if you need anything.
Absolutely, yeah.
We'll probably be knocking on your door more than you're knocking on ours. But in the background, we are working for you. I think that's going to be a pretty popular thing because I think over the next few years and decades perhaps is that people will be, okay, I understand it, and a lot of our community will get it and they'll just want someone to manage that for them. The other things that I've found is that people who are coming to us, particularly the people at retirement, is they know they have cash and cash will see them through in the short term, but they still want to invest. So, 2 years of cash is what I would advocate for as you enter retirement. 2 years, what I mean by 2 years, what I specifically mean is 2 years of your expenses, realistic expenses, just sitting in cash. It can be just in cold hard cash, savings account, something like that, a couple of term deposits of varying maturities. That is it. And then we've obviously got our Terra portfolio, which is the 50-50 more passive income focused one. It'll still grow, but it's passive income. And the other thing that people are coming to us for, Mitch, is this idea of a lot of them have, even the people that are in their 30s or 40s that are investing with us, these people are people that tend to have a bit of everything going on. I think of it like a medley soup. It's kind of like you got a bit of peas, you got a bit of carrots, you got more pumpkin than you do of this, and it's just all over the shop. And they don't know exactly what the flavor is going to be, but they've kind of got it. And I think that what Rask Invest represents to them is a chance to kind of reset and have a strategy straight out of the gate that's well managed, long-term focused. And there's a kind of like derivative of that is a lot of the older people who are in that situation are worried because they don't fully trust what they're doing. And they know that they're not just investing for themselves, but for their partners and for their family, which is something I found very common.
Yeah, Owen, I think it's quite common that you see people as they begin their investing journey and their confidence and whatnot grows and they start accumulating assets, they start accumulating different shares, different ETFs, different managed funds as they learn about things more and their knowledge expands. And then years and years and years go on, and next minute they've created these quite complicated portfolios.
Yeah.
And as we know, actually good investing isn't that complicated.
Yeah.
It's actually a simple process and a simple plan that if you have in place is highly effective. So a lot of these people are decluttering their life because they do know, especially I've had a lot of conversations actually with people who ask themselves, what if something does happen to me? I've got 4 brokerage accounts, 3 or 4 managed funds, probably 2 super accounts. If something happens to me, my partner has no inclination, no expertise in this area, no knowledge in this area. How are they going to pull all this together? I've created this mess, this web. And so they're decluttering that. They're selling down a lot of their, little small tidbit kind of stocks and things like that. And they're consolidating. They're coming to us for that consolidation because they know that they can actually go, well, check out these guys on YouTube. Check out this podcast. If anything happens to me, here's a login.
Yeah. Yeah. And that's really interesting. We had one of our biggest investors actually say something along those lines in the early days. He said, I'm just about to hand over all this money to a guy that I met on YouTube.
That was quite a good conversation. That was a conversation I had 2 days ago. And so the Rask Invest platform is HIN based. Okay, this is really important, getting it into a bit of jargon here, but if you invest with us, you are the legal owner of the underlying assets in your portfolio. So, so you can get the HIN from us and log into the share registries.
So like computer share, link, all these things that people would be familiar with.
And all the things that actually are really a pain to deal with. I had my sister call me at lunch today, asked me what an SRN was because she couldn't find it for her NIB holding that she gets a $200 dividend from. And she's held it for years and years and years and years and years, and she's trying to deal with computer share to get, and it's just, I said, you just have to go through the hoops. It's a real painful process. We do that for you. But anyway, this guy was talking to his accountant, and his accountant just said, well, maybe just get the HIN, log into computer share, just ensure that it's all in your SMSF name before you then go and transfer these guys an additional $500,000 for some bloke that you watched on YouTube a few times. I thought that was hilarious.
Well, fair enough. I was just telling you about a horror story of something that did happen on social media, which is all too common, what we see in finance and social media these days. In this case, we are on some of the social media channels, not all, and people have connected with us through that as a first point of call. And it's been good to see that people do trust us, and that does come across in a digital way. I think one of the things that you wanted to talk about, and something that we often don't talk about a lot, you and I talk about it a lot, but not a lot of people talk about it in the community, is how the people listening to this can activate their friends or family. They think about it, but we don't talk about it enough. And I know that this is one of the big reasons that you decided to join Rask anyway, was for this exact reason.
So I wanted to join Rask because when me and you were talking about Rask Invest, I thought it could be big. I didn't want to come along to help build a business and we get it to $100 million in funds under management with 1,000 clients, and that's fantastic, and we pat ourselves on the back. I came along because I genuinely think this could be a $2, $3, $4, $5 billion funds management business. And why that is because of the Rask community out there. The people that have been brought along, educated by this podcast, and have maybe become we talked about this term there just before, the CFO, the Chief Financial Officer, or the Chief Investment Officer, the CIO of their household or their friendship group. Yeah. So if you've been listening to this podcast for a long time, you probably have put the lessons into practice. You probably have a Perler account. And you're probably dollar cost averaging into that, into the ETFs that we talk about all the time. We do not want to interrupt that. We want you to keep doing what you're doing. But the chances are you've become the chief investment officer of your friendship group.
Yeah.
And so
Definitely.
when they reach out to you and say, hey, I know you invest, what should I do? We'd love for you to say, well, go and check out the guys at Rask. You know, that's how we're going to grow that word of mouth, treating our investors incredibly well, continuously nurturing the community with education. And we do have a community section on the website, which is amazing, where people can go and they can post questions, and there's conversations going on there. There's conversations going on about private equity. There's conversations about dividend reinvestment plans, all sorts of things going on there with the community members, you know, answering those questions and us chiming in and things like that. The one thing I wanted to say to all those people who Rask has helped along the way is they've become the chief investment officer of their friendship group. If you do refer people in, get them to let us know, because, you know, I want to thank you as well. So get them to email me, mitchell@rask.com.au. Jump on the chat. Let us know who referred you in, like you referred these people in or whatnot, and I'll give you complimentary access to Rask Core. The reason for that is because I reckon you're probably still going to continue to be the chief investment officer of your mates, and they're going to ask you questions. And so with Rask Core, you can actually follow along what we do in the Rask Invest portfolios and get the updates and whatnot. So come along, let me know who you are if you've referred people in, and I'll sort that out for you.
That's great. Yeah, let us know. We have had a lot of the same surnames in the original.
Very similar surnames.
Yeah.
We've got a cluster of a couple of surnames.
Yeah, and that's family units.
Yeah.
Yeah. Sisters, brothers, parents, kids, all getting involved, which is wonderful. Okay, Mitchell, we've got a little bit of time left. Let's kind of bang through these others, which is you are the household chief investment officer. What can you do to help your friends and your family invest? That was number 2. Number 1 was basically about clearing the decks and why that's really important to a lot of folks. Number 3 is talking about rebalancing, Mitchell.
I've had someone come to us and I asked him, why did you invest with Rask? And he said, rebalancing. He has failed at it time and time again in his own investing, because selling, that decision to sell and when to do it, the right time, how much, etc., was quite debilitating for him. And so he came to us because the rebalancing was incredibly important.
Yeah.
So there's a couple of biases that are at play here. So there's loss aversion, so people wanting to hang on to their investments until they get back up to even. Now, there's a great saying, I think it was a Munger saying, you don't have to make it back the same way you lost it. I love that saying. And then there's like a disposition bias as well, which kind of is 50-50 loss aversion, but also selling your winners too early, like taking that profit, like, oh, geez, I'm up 20% now. I'm going to take that off the table. And so we take those decisions away from people. We have those decisions of when we're going to rebalance in the portfolios. They're not based on preset timeframes like other, say, like robo-advisors and things like that go every single quarter they're going to rebalance. So we do this on an if not when basis.
Yep.
So a great example would be, if the market's had a great big run up and our growth assets significantly outweigh our defensive assets, that's going to trigger us to rebalance the portfolios naturally when, say, someone else might be sitting there going, I might just let it run a little bit more.
Yeah.
Yeah. And on the inverse as well, when the market has declined, our cash and our defensive assets are making up a significantly larger portion of our portfolios than our growth assets. And so when some people might be going, oh, geez, I prefer to sit on the sidelines and just see this through, where they're actually tipping into those growth assets.
Yeah, and that's a very eloquent way to put it. There's this report is from a while ago, and I've just got it here, and The theory goes, this is what it says, for some clients, rebalancing may be difficult to execute because it requires selling what is up and buying what is down, when many clients are behaviorally tempted to do the opposite. On the other hand, committing to a rebalancing strategy in advance can actually help clients to avoid this harmful psychological challenge. And the reality is that, well, this is true, that the times when you need rebalancing is not when you want to do it. And typically the only times you should rebalance based on a lot of literature is when things are most uncertain. The actual act of rebalancing, say every 6 months, every quarter, or everything like that, which is what a lot of the programmatic or like diversified ETFs do that, as well as robo-advisors, they basically all do it. The massive disadvantage of doing that is you cause tax for your investors. So everyone listening to this, if you've got a thing that's automatically rebalancing for you, you're getting taxed, whether you know it straight away or not.
It's triggering costs as well.
Yeah, it triggers frictional costs, so trading costs, which are just unnecessary. And so we have this, you could say it's dynamic, but in the end, what it is, we have this kind of like free-flowing rebalancing strategy where we have certain rules that if it's hit, it will rebalance, but those are quite liberal in terms of where they can go before they will strike a rebalancing event. Whereas, like you said, you don't want to rebalance if a portfolio has performed really well. You only want to do that at a certain point in time. And we do that across different asset classes. And we can also shift within asset classes. So just because it's growth versus defensive doesn't mean we can't go from cash to bonds or from bonds to some form of credit, which is quite common for a retirement portfolio. So that's another thing people don't really talk about is rebalancing, how you should do it. If you're listening to this, it's just if, not when. So if the time comes, but you have to set the plan in advance. That's what all the literature, I've got it here on my table. On the table, you can't really see it, it's out of shot, but it's all here on the table. That's what you should be focused on. Another thing that comes with this, and we just alluded to it, Mitchell, is tax. Tax is a real cost, death and taxes, they say. This happens because of trading. It happens because people have convoluted strategies and they're chopping and changing, and they're active fund managers, or if they choose the wrong passive vehicle, like a thematic vehicle or something like this, there's going to be a significant amount of tax because there's turnover in the portfolio. We minimize that by investing in funds that have low turnover, but also with strategies that are deliberately extremely long-term focused. Tax is a pain in the backside. It is a real annoying thing, having to report, track, do all that. How do we deal with that?
Yeah, so we become your inbox now. I don't know if anyone's been out there and they've bought a share or an ETF or a managed fund in the past. The sheer amount of paperwork that comes through your mail slot is ridiculous. How many trees the share registries and the ASX have killed is, I don't know, like some of the holdings that I have. I know, for example, I know my son's account that I'm investing for him. I've set the share registries for email-only communication. I still get mail. So for those people out there who are looking to simplify their affairs, us becoming the mailbox is I can't tell you how much that takes off your plate. And so we actually just compile a tax statement at the end of the year, and we email it to you. Okay, please don't ask me to. I'll mail it to you if you do ask, but we email it to you, and it's available to download on your Rask Invest platform as well. But also, we take away a bit of the burden by offering data feeds to your accountant or your advisor. So there's a number of platforms that your accountant or advisor may or may not use. We offer data feeds to about 8 of them.
So like Class, BGL.
Premium, BGL.
These are some X-Plan. Really popular.
The big ones. And then for those doing it themselves with ShareSite or Navexa, We give data. We have data feeds going to those as well. So you just have to give us your details there. And so this actually will significantly reduce the amount of time it takes you to do your individual tax at home.
It'll save you money.
Save you money if your accountant's compiling it.
Yeah.
All you need to do is sit back and wait for the tax statement to hit your inbox and click forward.
Yeah. Simple.
Yeah.
It's really that simple. Like people probably spend $500,000 a year on different subscriptions and things, and this will do it all. So that's kind of cool. And then finally, one of the biggest reasons I mentioned before that you joined Rask was because you could see the community. The other thing that we do and we want to champion is the actual community engagement itself. So being transparent, obviously, is really important for us, but being accountable to the community and seeing the community help each other, which we've alluded to you mentioned before, where people suggesting it to their friends is no greater compliment to us. But the community in particular is something that we think can help beyond a spreadsheet.
Yeah, absolutely. And so if you have been listening to this 4-part series, if we include the live show, but if you listen to the second part, I talked about a study called the Dalbar study, the Dalbar Research House, that kind of just shows the end result in investors' pockets from their investments, and they underperform the investments that they're in. I remember saying to you at lunch that I wanted to have a community KPI, hold the community and everyone in it accountable to achieving the returns of the portfolios. And that means controlling your emotions. And so if the community can help each other at the extremes of the market, not get overexcited or overly pessimistic, and if they can help each other there is a tangible value you can put on that. I know the Dalbar study actually is, I think on average, the performance is about 3% per annum. So you can put, if we nurture this community, have like-minded investors in there, helping each other out, especially at those times of extremes, you could actually say that our investors will be better off by X%.
I love that. And it's something that you've really impressed upon me. And I think that anyone listening to this, you can join our community for free, by the way. You don't have to be an investor with us. You don't have to be a member. It's free to join. But one thing that's really hit me hard over the past probably 2 years since we went on the road last year, had 1,200 people come to the events and whatever. We're going to do them again this year. So please keep an eye out for the second half of this year. We are coming to you. What I realized was that people actually get a lot of value from being around other people, particularly in the investing community, where it's not always the most lively. It's not always it's pretty dry. It's not that fun. People aren't really that engaged. But with our community, it's amazing. The community is wonderful. And we're very humbled to have you listening to these podcasts and coming to the events and supporting one another. But what I really took away from that, and also being part of the Australian Shareholders Association now, which we're very proud to be, is that we can give back to the communities around us. And I think as a kind of driving force over the next 10 years and the previous 10 years with Rask, if we are going to have an impact on the country and have an impact on financial literacy and have an impact on people, we can't do that as a team, even with a wonderful platform such as this. Everyone that has learned something from our podcast should go into the community, go into your friendship communities, your families, and talk to them about the virtues of long-term investing, not in a cultish kind of do it or else kind of way, but more of a, have you thought about this? This is probably good for you. You're probably doing it already in your super fund. And getting behind each other when times are uncertain, I think, is going to be our competitive advantage. And we really want to sharpen that edge and make sure that the community sees the maximum benefit of all these years.
I know I've said to you, Owen, people can get ETF portfolios at other places. What we're doing there is it's based on modern portfolio theory that dates back to the 50s. But yes, we're putting together these portfolios where we're doing the rebalancing, we're selecting the ETFs, and we're doing that from a lot of deep knowledge. But there are others out there that do it. The point of difference here is I can't think of a single other one that's got the community.
Yeah,
and that's what's going to help investors helping other investors.
Yeah. Definitely. So just to recap, the things that no one really tends to talk about is the power of community in investing, the power of being around people that are like-minded. Probably the other thing that people don't really talk about is having to clean your portfolio out and reset it, and simple works. Simple really does work. Another thing would be that rebalancing is not just something that you need to think about when things go wrong. You need to think about them in advance, because you will get confidence from it when the time does come. Tax is an inevitable cost that everyone will bear unless you're into some super wonderful tax haven.
And no one talks about the trees of the ASX is killing.
No one's talking about the trees. That's a sixth one that we can bring to the field. But the other one is there is no greater compliment to an investment company like ours than you recommending it to your friends and your family, because that is the most amazing thing that we could possibly receive as an endorsement, is the person that you love or see a friendship with, and to suggest that they come and see what we do. You can come and ask us questions. You can invite them to our events. You can do all of that. But we do have a live show coming up, which is for Rask Invest. It's the final fourth part of this series. And it's all about Q&A, investing Q&A, ETF Q&A, stock Q&A, about Rask Invest itself. We'll stick to investing. You'll get to see the platform and the ETFs that we're invested in, the exact ETFs that we are invested in, as well as the active fund that we've got in the portfolio to start with. You'll get to see all of that in the live Q&A that's coming up. There is a link in your podcast player or in your YouTube description if you're watching this on YouTube. Thank you very much. Head to that link. You can also send Mitchell and I a message, any question that you have about Rask Invest, including where to find the product disclosure statement, where to find the TMD or target market determination. That's all available on the Rask website, but I will be able to give them to you personally if you send us a message. So get in contact, mitchell@rask.com.au. We'll be able to email you any resources that you like, and you can book in a call. Well, Mitchell, we've got one final thing for people, and that is the live show that is coming up in the not too distant future. So keep an eye out. It's after work hours. It's going to be fun. It's going to be insightful. You can come and say g'day. People who have tuned in so far to them have really loved them. And this one in particular is going to be our big extravaganza. So we can't wait to share all the ETFs with folks.
Yes, so that live show will be happening on YouTube. So if you are a regular podcast listener, jump over to the Rask YouTube channel and you'll see it there.
Yes. And if it is appropriate, we can repurpose it for this channel. If we get approval from the overlords behind the scene here, the editors-in-chief at Rask, but I'm sure we can wrangle something. But definitely check it out if you want to ask us questions, you want to get it live. You can just stream it live while you're listening as well. So, Mitchell, always a pleasure, mate. Thanks for joining me.
Thanks, Owen.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.